Hey everyone, Luke here. Hope you're doing well. Today I'm going to talk about an interesting solution from Veritaseum. Now I talk a lot about cryptocurrencies on this channel. I'm a big fan of Populus, you guys know, and Veritaseum, and then a lot of these sort of utility tokens, right? So I want to talk about a solution from Veritaseum that is due to come out in the following weeks, or maybe a month or two from now, and how it's very, very powerful for gold and real estate investors, and how it really is a game changer for like collateralized loans and stuff like that, okay? So the name of this solution is VeLending, or at least that's what I think that they're calling it, right? You like my beautiful, beautiful handwriting? Best in the business, right, guys? But this is very interesting solution, okay? So let's talk about it. So typically you're a gold and silver investor, right? So, or precious metals, right? So you're a precious metals investor. Usually you're buying gold or you're buying silver, okay? Now, most people, unless you're a trader and maybe you're using leverage, you're not really buying gold and silver to make money, right? You're buying it to hedge against inflation. If you buy it near the, you might get some gains from it, right? Especially if it's like near the bottom of like a bear market, and then gold and silver will surge sometimes, and so you can get some significant gains. For the most part, though, gold and silver are to preserve capital, right? So gold and silver do a much better job than dollars at keeping up with inflation, right? So if you put your money in a savings account today, we're in such a low interest rate environment, right, that your money actually goes down in value. So every year your dollar goes down in value. This is called inflation, okay? And this is very significant. It's basically a hidden tax. So if you put $100 under your bed and take it out a year from now, it'll buy you less goods. Whereas gold and silver will either buy you more, but usually it's about the same if you average it out over time. So an ounce of silver will approximately buy you the same sort of goods as it did like 100 years ago, right? Same with gold. An ounce of gold will buy you about the same sort of goods or services that did 100 years ago. So they keep up with, and they don't inflate away, right? The way the fiat currencies do, like the dollar or the yen or the euro, right? These have inflation attached to them, okay? But you don't get any yield. So gold and silver, or precious metals in general, these are safe havens. So you don't really use gold and silver to make money. You use gold and silver to protect the money that you already have, okay? Now there's another type of investment, okay? And this is yielding investment, like real estate, okay? So yielding. So this is any investment that gets you yield, okay? Most common one, or one of the most common ones, is real estate, right? So with real estate, generally it appreciates, but also you get the passive income with the real estate, right? If it's an investment property, you're gonna get the rental income, okay? And so these are two separate investment classes. One is to more protect capital. I mean, you can protect your money to a certain extent in real estate. It's not as volatile as other markets or something like that. But typically, you buy real estate to get you yield, okay? So either it's going to appreciate, which real estate does tend to appreciate over time. The reason why real estate tends to appreciate over time is because it's scarce, right? There's only so many plots of land on the world. And as people move to cities or they move to certain areas, the land tends to go up in value, right? As more people go, the space, as a space becomes more populated, right? So people are moving into an area, it tends to appreciate, right? Now you go through bear and bull markets in real estate, but overall, real estate tends to appreciate, right? It tends to at least keep up with inflation or outpace it, right? More so than gold and silver, I would say, okay? But you also get rental income, okay? So this is very important, and what makes it a yielding asset. I believe I'm using the words correctly. So you get rental income, okay? So this means your real estate can pay you every month if you own a house and you have a renter, that renter pays you every month and you get that passive income. Okay? You cannot get passive income from gold or silver, okay? Unless people are borrowing it from you or something like that, but not where you still have possession of the gold and silver. So it's very difficult to combine the two. It's very important to combine a safe haven asset with a yielding asset, okay? But that's where Veritasium is providing a solution to combine the two of these, okay? So let's talk about how they're going to combine both these. Okay, so enter Veritasium. Okay, so Veritasium. Okay, so enter Veritasium. So Veritasium is a new solution called VE Gold. Okay, so VE Gold, and they have also VE Silver, and I think they have Platinum and Palladium now too. So VE Gold is basically just tokenized, audited gold tokens, right? So VE Gold, you know, it's basically a token that represents an ounce of gold. Veritasium hires a security team, and they have a vault. They store the gold in a vault. It's insured and audited, and then they release tokens on Ethereum. So they're ERC20 tokens. Okay, so it's an ERC20 token, which means it's the basic Ethereum token, and it's on the blockchain, right? So this means this is very interesting because it basically is it's the tokenization of an asset. So on your hardware wallet, on your cell phone, you could basically have you could store digital gold, and it represents real gold in a vault. So this is very powerful, okay? In the future, you'll be able to do this with real estate. Basically, anything that has value will be tokenized, in my opinion. This includes stocks, real estate, precious metals, oil, any commodity. Basically, anything that has value will be tokenized on the blockchain. The reason for this is because the blockchain is more efficient, and human beings move towards efficiency, okay? This is the ERC20 tokens, you know, once it scales more, will be even more efficient for fiat currencies. So we have something called the US dollar coin now, where it's a fully regulated by the federal government and approved US dollar coin. And if you think of how companies charge like 3% when you use your credit card or debit card, you know, the company has to pay 3%. A lot of people don't realize that on every transaction. If you have a blockchain-based dollar coin, you can save on fees, okay? So it's much more efficient to tokenize assets, right? It's more liquid. You can secure it yourself on a hardware wallet. It's really interesting. You can basically have $1 million worth of gold on a Trezor wallet. Okay. There's some trust involved, right? It's not quite like storing gold at home or something like that. There's a little bit of trust involved because you're trusting that Veritasium is a trustworthy company and they're properly insuring and auditing. But they're also open about it, right? They are open about the insurer that they use, the vault that they use, where they're sourcing the gold from. And the gold is redeemable at any time. So I could have a bunch of VE gold on a hardware wallet, send it to Veritasium, and they'll ship me the gold. Okay, so this is very powerful just because of liquidity. It's easier to store gold tokens. It's easier to sell gold tokens back for fiat, right? If I have $1 million worth of gold, you know, shipping that to a buyer is finding a buyer for a lot of gold. Whereas if there's a liquid marketplace, I can sell the gold tokens back for a dollar token or for Ethereum or gold. I mean, Bitcoin even, or something like that, right? The whole blockchain ecosystem is a very liquid ecosystem. And once you're in it, once you have a tokenized asset, you're in that ecosystem, and it's very easy to sell one asset for another asset. You know, it's very easy to sell Ethereum for Bitcoin, or Bitcoin for Litecoin, or Litecoin for whatever. It's very easy once you have an ERC20 token to then reach a lot of liquidity, basically. Okay, just because it's programmable. Okay, so VE Gold is a safe haven asset, right? It's a precious metal, right? You can think of it just like owning gold, but it's tokenized gold. But you can make it with the Veritasium's new VeLending platform. You can make it a yielding asset. And how you're going to do this is you're going to get a loan off of your gold, right? So let's say you have X amount of gold. Let's say that you have $1 million worth of gold. Okay, so $1 million worth of VE gold. Now with VeLending, you can get a mortgage off of this gold. So your gold's sitting there. It's a safe haven. It's keeping you safe from inflation, and then you can get a mortgage off of it. So let's say you do a 30% LTV, or let's say you do a 50% LTV ratio on your gold. So that means you can get a $500,000 loan from your $1 million worth of gold. So then you get a $500,000 mortgage or loan. Mortgage is just a loan on a property. So then you have $500,000. Okay. Then you take that $500,000 and you buy an investment property. So you buy an investment property that will get you rental income. Okay, so now you've basically turned this gold into a yielding asset. So how this works is VE Gold will go into a smart contract. Okay, this goes into a smart contract that Veritaseum has designed. It's locked into the smart contract as collateral. Okay, you get $500,000 wired to you, or however they want to do it, right? Well, I imagine it'd be wired to you. Okay, and then let's say the interest rate. Let's say it's a 5% interest rate on your $500,000 loan. You buy the investment property with cash. So what's 5% of 500,000? Let's see, 10% of 500,000 is 50,000. Then that'd be 25,000. So it's 25,000 a year in interest, right? So 25,000. Let's see. I'm gonna get my calculator here. Let's do some calculations, right? So 5%. So 500,000 times 0.05. We got 25,000. Divide that by 12 per month. So you're paying, if it's 5% interest. Now, I'm not saying this is the interest loan that you'll get. It'll be this high or low. This is just an example, okay? So 5% interest of 500,000, you're going to be paying about approximately $2,000 a month, okay? And let's say it's a 30-year mortgage. Okay, so at the end of 30 years, you pay off the loan, and then you would get your gold back out of the smart contract. Okay, so it's a 30-year mortgage, 5% interest. Then the investment property, you get, let's say it's like a duplex or something like that, and you get $1,500 a unit. So you get $3,000 in rental income a month. Okay, so you're netting. So if you're getting $3,000 in rental income a month, and then you have to pay $2,000 a month in interest, you're making $1,000 a month, and it's just rental income. Okay, so you're now getting $1,000 a month off of your gold. Okay, traditionally your gold would just be sitting there. Okay, it would just be sitting there collecting dust. It would be saving you from inflation, right? Saving some of your capital, but it wouldn't be yielding like property. This is why real estate's one of the most important and widespread investment class, because it's you can get yield off of it. You can get rental income, okay? But now you're getting rental income off of your gold, and you have the best of both worlds. Not only that, you're going to get your gold back when the mortgage is paid off. Okay? So not only are you getting this rental income, it's important to realize that you're paying off with the interest, you're paying off the $500,000. Okay? So it's a 30-year mortgage. So at the end of the 30 years, you're paid off. Okay? That means you have the property free and clear. So let's see what you got at the end of the 30 years. You get your gold back because it was just the collateral in a smart contract, and the smart contract is executed once the mortgage is paid back. You get your $1 million worth of gold back. You get the property because you just paid off the mortgage, right? After 30 years, you've paid off your entire mortgage by paying interest. I mean, and you're not paying it. Your renters are paying it, and you're getting $1,000 a month of passive income. Okay. Then at the end of 30 years, you're gonna get you'll own the property free and clear. So you'll be netting $5,000 a month, right? Because you don't have to pay the interest anymore. So you'll be making, so at the end of it all, you'll have a property, and that's assuming you weren't able to raise rents. Okay. So if you're getting $5,000 a month on a property that you own, and you got all your gold back. Does that sound awesome? Yeah. It's pretty powerful stuff, you guys. And it's really the best of both worlds. So traditionally, you're going to either own gold or silver. It's just going to sit there. It's going to protect you. It might make you some money, but it's not going to get you the yield that you want. Or you own real estate. And there's risks with real estate, right? It can go up, it can go down. There's trade-offs, right? But this is actually a way to combine the best of both worlds. Okay. Collateralized loans will be a big thing. And it's important to realize you don't have to just do that with gold, right? In the future, they'll have Bitcoin loans like this. Salt Lending's already doing this. They'll have Bitcoin mortgages where you put the Bitcoin into a smart contract, you get a loan off of your Bitcoin, you pay a certain interest rate, you can then buy that to buy an investment property, and then you're going to get the rental income, and then at the end of the 30 years or however long the loan is, you get your collateral back, plus you own the property, plus you're getting that rental income free and clear. Okay. So yeah, and there's all sort of variables, right? This is just, it's important to realize this is just an example. The interest rate could be higher, it could be lower. One of the most difficult aspects is actually knowing how to buy an investment property, okay? Because you have to know that you're going to get more rental income than the interest you're going to have to pay. You have to know it's in a good area. You have to know where you're at in the real estate cycle. If you're doing a rehab or something like that, this makes it sound like it's super easy and stuff like that. I mean, getting the loan is easy, right? Anyone could buy the gold, right, and then get a loan based off of the gold. The hardest part in this whole thing, by far, would be finding a realistic, solid investment property that you could buy. Okay, whether you're finding it yourself, your real estate agent is helping you, an investor is helping you, you become an investor yourself through learning it, or someone else has sourced it for you, etc., etc. Definitely the most difficult part of this scenario is finding the investment property, right? And understanding how to make a cash flow and understanding the risk involved. There's risks, right? You have to have renter insurance. You have to pay property taxes. The hardest part is structuring the investment property deal, okay? Buying VE gold is very easy. Put into a smart contract is very easy, getting the money wired to you. But structuring this by far is the most difficult part for most people. Many people go wrong with this, like I said, there's all, you have to write insurances on your investment property because it could get flooded or burned down. The renters might destroy the property. You have to either manage the property yourself or have a good property management company that's collecting rent for you every month. You have to deal with vacancies if renters move. You have to deal with, if the renters aren't paying you on time, how quickly can you get the renters out if they're not paying you and get someone else in? Minimizing downtime. If they stop paying you, you have to evict them. You can't evict them for a couple weeks. Then you can't find another renter for a couple weeks. You're out for 1 month's income. You have to know a lot about real estate and a lot how to structure a deal to do this sort of thing. So I don't want you guys to make the mistake that, this is so easy. Once I have my VE gold, I can get yield on it. No. And I don't know if Veritaseum is going to be finding the deals that you can invest in themselves. Maybe they'll charge. That'd be really cool if Veritaseum would find deals, and then let's say they charge you like 1% or 5% or whatever to source the deal. There's act like a middleman. So maybe you wouldn't be making quite as much yield on the investment as you had found it yourself. But you could trust Veritaseum that it was a good deal and do the research yourself on the deal as well, of course. Maybe you wouldn't be making quite as much, but it'd be less of a headache if Veritaseum took care of them for you, okay? And you can tokenize the real estate. That's one thing I didn't even mention, you guys, that's pretty incredible, is that you can actually tokenize the real estate itself. So you don't have to buy a whole property. You could get a fraction if it was a good deal. Like let's say Veritaseum found you a deal. Veritasium could tokenize the deal. So what I mean by that is they could take the real estate and break it into 1 million tokens. So you don't have to buy a whole piece of the real estate, right? So you could have $1,000 worth of VE gold, right? Get $500 loaned to you, and then with that $500, just buy a fraction of the property, right? So you could buy what $500, it'd be 1,000th. You could buy 1,000th of the property, and then you get 1,000th of the rental income. So you would just get a fraction of the rental income, basically. So you would get well, in that instance, I think it'd be $1 a month, right? But so that's important to realize too, is that the real estate, with tokenization, you don't. It's not only tokenizing gold, you'll be able to tokenize real estate, and so you'll be able to buy fractions of real estate. So you don't need to buy a whole property. Okay, you could use this system to buy fractions of a real estate investment property, and it'd be the same math, right? It would just be less. You wouldn't have to do the whole deal yourself. So instead of $500,000, it could be a $5,000 loan, and then you would just be getting, that'd be 1/100th of 500,000. So it'd be a $5,000 loan off of $10,000 of the VE gold, and you would be getting $10 a month. Okay, which isn't very much, but it's better than your gold just sitting there, right? I mean, if you're gonna own gold anyway, it's not gonna make you this sort of thing. It's not gonna make you rich quick. It's gonna take, in this instance, most mortgages are 30-year mortgages, so it takes you 30 years to really see a lot of profit. But at the end of it, you're owning the property free and clear. You're getting that rental income still, and you get your gold back. And the thing is, even though it's not a get rich quick scheme or anything like that, so don't make that not mistake, and it's hard to source the deals, it is far superior than your gold just sitting there. Okay? Would you rather just own $1 million worth of gold, or would you rather do this, get the rental income, have it paid off after 30 years, and then own the property free and clear, be getting the rental income, and get your gold back? Remember that you get your gold back, right? That's just the collateral for the loan in case you default, which you might if you find a bad deal and you stop getting rental income and you can't pay the mortgage, right? You could default. So it's very important that you're cautious and that you set the deal up properly. But make no mistake, this is far superior than just owning gold or silver. Okay, and again, you can do this with any asset. You can do it with V's. Gold. This is just an instance where it's gold. They'll probably have Bitcoin collateralized loans at some point. Especially once volatility tends to drop off. You do this with silver, even though it's more volatile. You probably might have to have a higher loan to or a lower loan to value ratio. But yeah, this is incredible stuff. This is incredible wealth building stuff. Okay, because you also get depreciation of the gold, right? Let's say you bought the gold in a bear market, $80 million worth of gold, then you get it 30 years from now. It might have outpaced inflation by far. Okay. So that's important to realize too. And you got the appreciation of the property maybe. If it was a good deal, if you're smart about this investment, typically real estate appreciates if you know what you're doing. So you're going to get the appreciation of the gold, and you're going to get the appreciation of the real estate and the yield. Okay. So incredible stuff. VeLending, look for it to come out in a month or two. Veritaseum keeps knocking it out of the park. I look forward to basically using this sort of solution. Okay. It's a game changer. Let's be honest. VE gold itself is a game changer, but being able to earn yield on your gold in this sort of fashion, this has basically never been done before, and not in a sort of automated smart contract way that you're going to be able to do it. Okay. Hope you guys enjoyed the video. Don't forget to subscribe. Don't forget to like the video. Any questions can go below, and I'll talk to you guys later. Bye bye.